episode of the Realm podcast where we talk about all things future cyber tech. This week, I'm joined once again by Brian Waltermire. Go ahead and introduce yourself again.
Hey, thanks, Robert. Brian Waltermire, founder and president, CEO of DLT Alert, where we're democratizing cyber insurance for small, medium businesses.
Yeah, that's great. And we have an interesting thing because I know DLT Alert uses various technologies on its back end. But one of the things that I kind of wanted to focus on this episode is the use of Web3. If you want to spend a little time talking about your relation with Web3, how you're using it, and just kind of in your own words what it is.
Yeah, well, it's a lot of things, but I think a simple way to explain it is the internet was 2.0 to business as blockchain is to 3.0 and business or commerce, right? So it's basically a blockchain foundation that is being implemented through myriad of different business processes for validation, automation, trust, verification, things like that. Some of those kind of things you might have heard around Bitcoin value proposition, for example. Oh, it's more trustworthy. There's a limited amount. It's traceable, all this stuff. So some of those features, think of those, how they might be implemented to improve current businesses. So that's Web3 in a nutshell, or those technologies. There's many, many of them.
Okay, so in layman's terms, it's basically marrying blockchain with web technologies. So, so then I guess a good natural progression of that question is, what do you see as one of the major benefits? I mean, obviously, DLT Alert uses Web3, but just from an objective perspective, why do you think that's a good advantage over any of the current implementations that we have right now?
Yeah, well, specifically, the reason why we chose to use Web3 technologies in an insurance or warranty type of product is to increase the automation, the productiveness of our platform, but to also increase the level of trust. So, in our opinion, there's been a lot of consumers and businesses moving to purchase insurance online. There's some pretty big companies that have done this successfully. They've gone public, multi-billion-dollar companies now. And it takes out a lot of the human element that has been very traditional with regard to a broker. You call your broker, you need car insurance. You call your broker, you need life insurance, and it's this human process, paper application, and verifications. A nurse comes to your home for your life insurance, etc. The next evolution of that was just simply buying some kind of basic forms of insurance online by answering online questions. And then they do some cool verifications in the background by checking your social grid and things of that to verify these things are true. And now the next evolution, in our opinion, is the integration of inherently more trustworthy processes. And the way that you get to more trust is through transparency and immutability. So if something can't be changed, but is transparent and people can see that, there's inherently more trust in a system that uses those features than one that doesn't. Right? So the current online insurance companies, again, they've done very well. They're selling a product and people are buying the product. They know little more about the product than they did before, probably even less, because they don't have the broker explaining things. They're just an online transaction.
Right.
So with what we're doing, we're bringing back a lot of the transparency or information around what you're buying, how supported this is, the validation of a claim, supporting information to that claim. We're making it completely transparent and automated in a way that is highly trusted, because you can't change it much or at all. And you could see the record of the progress in a public format, which is actually a blockchain. The blockchains are basically a public ledger, and you can make entries on them of any sort. There's different blockchains, but what we do is we take information from an incident and we put it out to the public, and then certain things happen with that information around information, and allows process to be more automated and creates a lot of value for our customers.
Right. Yeah. And I mean, I do know. Well, I mean, obviously, I know part of the process for DLT being, we de-identify information when we write it to blockchain, so that way, what's written to blockchain is just a record of what happened on this time. This happened.
Yeah.
Then this, and then these steps were taken, or these steps were taken, and it's very basic, but it's the goal being, having that trust, having it out there, being publicly available allows it to be easily understood, and people can see it and read it and understand exactly what's going on. And as you mentioned, the human element, and I know that was a big I don't want to say downfall, but it is definitely a bigger component that slows everything down. All the things we talk about with these blockchain stuff is happening almost instantly. I mean, we tell people within 24 hours you get a payout, because it's better to promise 24 hours and then you get it paid out in an hour rather than the other way around. But it's
6 months.
Yeah, because I know back in the MSP days, we had people get hit and then they need to process this, process that. External person has to come in and forensically evaluate the environment and determine that, oh yeah, you did get hacked. This was engineered. Somebody came in and hacked it. They had to basically eliminate any possibility that some person screwed up. So, but then again, it takes time, and that entire time, the company is down. The company isn't able to operate, essentially.
Right.
Unless you've got backups ready to go in a failover environment. But, statistics show that not everybody's got that set up. So.
Right. And time is money all the time. And in a downtime event, it's even more significantly or more cost worthy.
Very true.
To pay attention to.
Yeah, very true. So yeah, that's actually a not so good segue into the next part of the questions that I wanted to ask, which is, kind of like, and this is something I kind of posed to Motion a couple of weeks ago, which is, what do you think why should people care about Web3? I know we've discussed, from a business perspective, what makes it better, what makes it unique. So, but the general public, the Joe Schmo that maybe doesn't understand blockchain or any of the cryptocurrencies and stuff, what sort of benefit do you think could convince them that these Web3 technologies are, this is the next wave of technologies, and it's good. Every time there's new technology, there's people are resistant to change. So, like, what do you think could kind of help inform people that, like, hey, this is a good thing?
Well, through many conversations and interactions with corporate VCs and investors and distribution partners and insurance companies, people don't care about the technology really ever. Some do, like us. Yeah. But what they do care about is the value that it provides to them or the end customer. I can tell you that a business who can obtain a financial payout from us within 24 hours or as fast as their bank will allow it is very happy, compared to receiving a financial payout from a traditional insurer 3, 6, 9 months into a failed scenario or a claim scenario. So it's really the benefits that it derives over how do you convince them about it. Convincing them about the technology, it's kind of the things we just mentioned earlier in the podcast, is difficult. It's deer in the headlights a lot of the times. What's easy is, do you like money faster? Yeah. Yes, I do. Would you like to be able to get your coverage done in 5 minutes from now and active? Yes, I would. The last application I filled out took me 4 hours. I can personally tell you, filling out an application for another business it took me the better part of 3 hours, and I couldn't answer all the questions. You know?
Right.
And then we were denied. And I had to go back to the drawing board and another one. And the broker is doing all this work and all this stuff. Well, would I have preferred that to be 5 minutes and active and paid and move on and protected? Well, of course. So those are the easy things to latch onto. So it's fun to talk about the technology.
Yeah.
Again, the drivers for us are really creating trust, creating transparency, creating a better and a more stable financial product than what exists in the marketplace today. But tell that to the average business owner or CFO, and they'll say, I don't really care about your business. I care about how well you can protect mine. Okay.
Right.
So, there's a time and a place for those technology conversations, but it's really about the value that the tech provides.
Yeah, definitely. I mean, I would agree. And I think that's also something kind of we touched on previously, which is that when some of these people start adopting these technologies, they won't really know they've started adopting these technologies.
Right.
It's like, I know we talk about the car analogy. I know we've talked about that. We don't know how a car fully operates, but yet we still drive a car. And it's kind of a similar thing. If you look at like the video game industry with, DirectX 12 and the big buzzwords out now is, ray tracing this and ray tracing that and DLS. And the consumers don't really know these technologies. They're there. Maybe they're available. Maybe you can turn them on. But it's, they don't know what they are. They don't know how they work. It's buzzwordy. It sounds good. So that's the simple analogy of bringing all that back together is, hey, we're using Web3. For some people, that's a selling point. And for other people, they're going to be like, what is that? Why do we care?
Right. No, it's a selling point for the more tech-oriented crowd. Yeah. But I think through your analogy, you bring up a good point, which is, listen, you didn't really know what the internet was, but you do know when you use it.
Yeah.
Right? True. You go to a browser, you had to learn some of these new things. The big difference, try to clarify a little bit more from the previous question, is the big difference with Web3 and Web2. Web2, you're using it. It's this interface process.
Right.
To interface with information in a more efficient manner. Google search can bring you almost anything data-wise.
Yeah.
Or Web3, it has as much or even more value. It just comes in the forms of business processes or transactional verifications, which inherently raises the level of trust of a transaction, no matter what it is. So, but those aren't as tangible as clicking on your web browser, going to Google, going to YouTube, going to your email. Okay, I'm on the internet. Great. You would never know you're on Web3. Why do I care?
Right.
Those things happen in the background.
Yeah.
Right. But I think that's a pretty good distinction between 2 and 3.
Yeah, I mean, because it's, by and large, people don't know how GoDaddy works or how the domain name registration works or how public DNS. They don't understand any of that stuff works.
That's why GoDaddy exists, to make it easy.
Yeah, exactly. The less you know about it, the better. They're one of those companies that's just kind of behind everything, but yet run everything. It's like Java or Oracle. They power so many things, but people don't really know what they are or what they're doing. I know about every couple of months, I get a little pop-up that says, hey, Java needs to be updated. I'd be like, what uses Java? I don't even know. But, I need to update it.
Yeah. No, it's a good description.
All right. So then that kind of segues into kind of like the last kind of little kind of talking point here that I really wanted to hit, which is kind of what do you think? We just kind of talked that the end users aren't really going to know when they're using Web3, but like, what do you think is really going to be the big driving force behind mass Web3 adoption? Because I know there's a lot of hesitancy with blockchain stuff, and there's kind of some people drag their feet on it because doing it my way is fine. So, there's doctors' offices that still use paper charts, even though we're in the year 2023.
And facts.
Yeah, the fax machines. Why I don't know. To take a picture and anyways, but like, so what do you think is kind of like going to be a good either like a growth
Catalyst.
factor or catalyst? Yeah, something that's going to really kind of drive the even the developers to start just working on Web3 more than Web2.
Well, there's a few different questions there, but the first one, what would be the catalyst? In my opinion, it's some type of financial turmoil,
Mm.
right?
Mm.
When
Mm-hmm.
Bitcoin was born in the great financial crisis, 2008, 2009,
Right.
housing, banking collapse,
Yeah.
all the Fed rescues and all that stuff. So I think that's the kind of the hockey stick scenario, but a less pointed example is already occurring, and I think it's twofold. One, there's value to be derived, there's money to be saved and made. So people can make money, they can save money, they're going to do it, right?
Uh-huh.
The second piece is it's happening now. It has happened in some of the largest financial institutions in the world through a process of real world tokenization of assets. So think of the way a stock, stock on the stock market is interacted with today. It's become ubiquitous for individuals who own stocks to buy and sell them through an app on their phone or a web portal, or where before they used to have to call a broker, get
Right.
them on the phone during market hours, give him the order. He then relays that order to someone on the exchange, right?
Right.
Now you can go on and you can buy it online, sell it online. But when that transaction happens, when a matching of a buyer and a seller occur, that's a trade,
Right.
right? So they agree upon on a stock, then they agree upon a price and time, which is now, and the price could be whatever it correlates.
Right.
But when that happens, there is a clearing process or a settlement process of, hey, who sold and who bought? What
Mm-hmm.
institutions are involved in this? What broker owns this on behalf of this customer, et cetera? And how's that all clarified? That's all a pretty manual transaction. In fact, in the trading industry or Wall Street, it's called T+3, which is a settlement time frame. So it means 3 days. So from the time that a stock is traded, bought and sold between two participants, that allow for 3 days for all of the information to be mixed and paired and everyone to agree to that this is a valid trade. I've been there, I've
Okay.
seen it's 3 days. It's now moved to T+2. In different countries, it's still T+3, et cetera. It's a long time
Yeah.
in our day and age, 3 days for anything to be settled, right?
Yeah.
Now, what's happening are organizations that actually do that type of thing. The largest one is called DTC.
Mm-hmm.
They settled over $4 quadrillion in trades last year alone. They're moving to real world asset tokenization. So, tokenizing those stocks with blockchains
Mm-hmm.
that allow the transference of all of the data around the transaction to be trusted and transparent to an extent within their universe and interacted with in these kind of immutable, trusted formats, but almost automatically. So you don't go to T+3 to T+2, you go T+3, T+2, T+1 minute.
Right. Because
You know what
it's
I'm saying?
yeah.
So that's what's happening now. DTC is doing this. Swift, if you've ever sent a wire transfer,
Mm-hmm.
Swift is the messaging agent behind that. Hey, Robert is sending $10,000 to his Swiss bank account at this company. Yeah, blah blah blah. All that is information, and that has to be paired with the recipient side for them to credit their ledger that the money you sent is acknowledged and that the
Right.
account is credited the right way. So Swift is the number one platform, messaging platform in the world that does that. They're moving to this type of cross chain asset tokenization, et cetera. And a few of the biggest financial institutions, as far as like banks, they're doing it as
Right.
well. So the adoption has already begun. It's little known. It's easy to find. Just search it. Swift
Mm-hmm.
Chainlink. Search it. you'll see it. So it's happening. I've seen these people. I've met these people. We're simply taking some components of that and we're enhancing an insurance product, and through that process, we've created a new type of product that is highly bespoke and consumable and usable. So I know it's long-winded, but I wanted to touch on all three kind of components of your question.
Yeah, no, that's fine. I mean, I have my own bad habit of rambling a bunch of questions out at once, but no, I think that's a great answer, and it definitely touches on things. But I think to bring it to a point is what you're referencing here is kind of like the mass adoption of financial institutions. Once those institutions really start grasping onto the blockchain, the Web3, all these different technologies, then we're going to start seeing it much more prevalent in places. And if Swift is already shifting towards this, then yeah, it's just going to be a matter of time. Whether
Yeah, so
it's
those are
months or a year.
in the bell curve or the hockey stick curve. It's kind of like we're at the very low, just above the zero adoption.
Mm-hmm.
And that's why I first preface the my answer with, I think there'll be some type of financial dire scenario
Right.
where you go from here to the upward trajectory. But that can only happen when some of the people are already using it, right? So
Right.
it gets adopted, but then it explodes at a certain point, akin to what happened to Zoom during COVID.
Right.
Some people are using it. It's a great platform. It's better in most ways. Yeah. Do I care over Google Chat or do I care over Ring Central or whatever? Not really. But then it became the number one thing for different reasons. So
Yeah, well, I mean, there's a different. My brain is thinking there's a couple of ways that scenario could happen, and one of them could be there is an instance in which companies that don't have this technology adopted are impacted by something. So
yeah, that
whether
makes
it's some new WannaCry virus strand that's focusing exclusively bank accounts, but like companies that are operating on the blockchain are less impacted. So then like that could be the catalyst. Oh, well, this bank failed and this bank failed and that bank failed, but these two didn't because they're already using these new technologies. So
yes.
I mean that could also be, the impetus. It's like what why did Microsoft start including antivirus with Windows? Well, because they needed to, you know, just the impotence of change always happens usually in dire circumstances.
Yeah, unfortunately, but yes.
Yeah. So
Yeah, I think your analogy is good. It really just supports what I was saying. It's kind of like the Zoom. Okay, well, why did people start to migrate to Zoom? Because the businesses that were using Zoom as people went to work from home were still being productive, and the
right.
ones that weren't were having to compete in a different landscape, right?
Yeah. Yeah. Suddenly, I mean, during those first couple of months of COVID, when all these companies, because there's still this big stigma. I know Elon Musk loves to talk about work ethic in the office, in the building, but and I think there's some truth to that for some
Yeah,
businesses, but a lot of businesses, people sit at their desk and do their job, and they have their incoming tasks, and as long as those are getting done, it doesn't really matter if they can have a water cooler they hang around with their coworkers. So
yeah,
the companies that could shift to that easily just did. And it was a really easy transition. So ones that had Zoom already set up for, because I have a couple of friends that work in industries where like they would work 3 days in the office, 2 days at home already. So they just went to working 5 days at home, and
right.
they would have more Zoom calls and more team meetings using these tools. It's always funny, you talk about these technologies that are supposed to, bring us together, but like they divide us. But then COVID happens, and now these technologies do literally bring us all back together. So
Right.
it's a fun little cycle. But I mean, that's when Zoom absolutely exploded. And I feel like I can't think of any immediately, but I feel like there's a couple of companies that tried to keep up, but just
Yeah,
couldn't because Zoom was just already so well known.
yeah, yeah. I don't know what you attribute precise Zoom success to, except they're better, and maybe they had a larger base And it kind of was the network effect after that. Hey, let's do a Zoom. Oh, well, I already have it. They just send you an invite. Now you're in it
Yep.
inherently, and
Boom, boom.
you get offered a subscription and then you buy it, right? So it was probably something like that, but who knows really? But yeah, I foresee something like that, some type of calamity that really creates the mass adoption. And again, it's not going to be mass adoption by people like the individual. It'll be
Right.
mass adoption by the institutions, and people are inherently using those institutions and tools as a result.
Right. Yeah. Yeah. That's definitely something we've hit on before, which is, the end users. I mean, like Chase Bank, if they start backing all their stuff with blockchain, I won't be impacted. I mean, my daily banking is not going to change, but like their development, their coding, their perspective on the back end to secure it is what's going to change.
Right.
So it's going to be when the developers start adopting the technology into the back end, and the end users may not even see a difference at the end of the day.
Well, imagine your scenario, except instead of just using it on the back end, one of the things that they do at Chase is they tokenize the real world assets. And you can now see that your money you have deposited in your Chase savings account is where it's being lent out, right? Banks
Right.
lend out deposits. That's how they make money.
Yeah.
So you had the great financial crisis was basically overzealous lending
Right.
and, unaccountability of the lending and the standards and the derivative lending and all this stuff. But imagine if you could see where your dollars resided at the end of the day. Hey, all accounts less than $1 million, those assets are only invested in grade A residential real estate where borrowers have above 800 credit scores. And those dollars are tied in a contract. It can't be changed. You can't move outside of that contract without breaking the contract. And it sounds crazy, but that technology, that capability is available now. It's called a smart contract.
Right.
That's what we operate with on the back end of our policies to ensure the adherence to the policy itself on behalf of the customer. Right. So when a consumer begins to see turmoil, as you said, most of these situations happen or adopting new technologies happen at some big sea change, usually a problematic one.
Yeah.
But if you as a customer were offered, hey, Robert, do you want to see where every dollar you have invested in your savings account is used and the safety which is being put around this, or do you not care and you just let us do whatever we want? Which one would
Right.
you choose?
Well, I mean,
You would choose
you pick the
to
safer
know.
option, yeah, to know it's
That's it.
being treated appropriately, yeah.
Any sensible person would. Why wouldn't you is the better question, right?
Right.
Well, you might go, choice A might go gamble this on, high yield junk debt, or you're going to go invest in the safest asset in America. Um, I'll go with number two, please, because I want my money to be there tomorrow.
Yeah. Yeah.
Right?
I mean,
Everyone will always choose that. In fact, I won't give you the whole story, but we presented to a corporate VC, part of an insurance company. This guy, pretty smart guy, well, why do you use blockchain? And I posed a question like that: would you rather purchase your life insurance that will protect your family after you're gone, or support your family after you're gone, with an institution that has a good reputation, but you have no idea where those dollars are backing your policy, or if in fact, even if they're there or not? Or choice B, where you can see them on chain, backed in a grade A institution, and those dollars cannot be moved to any other bucket besides your life insurance. So you know with 100% certainty that your policy will be paid if you die. And he couldn't answer, this and all this scenario. I said, no,
it's a simple answer. You just don't want to answer it.
you're dancing around a question because it's an obvious answer. And
Right.
that's what Web3 provides to people. So
Yeah.
it's pretty easy when you look at it like that. It's just people aren't looking at it like that yet, but they will.
Right. Yeah. Well, soon, you know, um, that's really kind of the crux, I think, of what we're talking about. Is it'll be soon, probably sooner rather than later for a lot of these institutions, since the adoption, as you mentioned, is already starting with a lot of these
Yeah,
financial
yeah, that's a good point.
institutions. So hopefully whatever happens is not too calamitous, but
Agreed.
you know, I don't I don't know if we as an America can suffer another financial problem so soon after the last one. So
Yeah,
we'll just wait and see. But hopefully these technologies will be there to kind of help
yeah,
carry us through in a more secure fashion.
yeah. Like it gives me a good feeling to know that we're doing that for that purpose, whether people recognize it now or not. It's nice to talk about. It's nice to hear. Do people care? Maybe not so much right now, but it, in the future we believe they will, and hopefully we're in a position where we have that traction going. And if something happens, and they say, "Oh well, you guys survived and actually kept continued payouts because all of your claims are backed, and we can see the backing and it's locked in," well, I feel much better using yours. That's how those decisions are made.
Yeah, absolutely. All right, well, I think that about wraps us up for the amount of time that we've got today. I think we've
Okay,
actually
good.
already gone over our half hour, but say la vie.
It goes by fast.
It happens.
It's fun conversation.
Yeah, I mean it's always great conversing and having these discussions, especially dipping a little bit more into the technology side and dipping a little more into the what ifs and where we're going to go. Um, but yeah, I think that'll do it for this episode. Thank you again, Brian, for joining us, and
Absolutely.
thank you all for listening. Don't forget to like and subscribe.